It's Adam Anderson, owner and founder of WealthGuard Advisors.
Hello, I'm Blake.
Hey, I just want to remind everybody that past performance is not a guarantee of future results, and you should read the disclosures at the end of this video carefully. Today, we're talking about the S&P 500 and kind of the market action that we saw from last week. And I'm going to bring up a chart. Blake, you want to start us off on that?
Yeah, I just highlight, last week was kind of a roller coaster. We started up, we had a really down day on Thursday, and I think that's a classic case of buy the rumor, sell the news of the government reopening. So we've seen that a lot historically, and it was very typical to see something like that. But seeing that sell-off day and the prior week's big sell-off day, the week before that we had a big sell-off day, we are getting a little more cautious with how the market's going.
Right. So looking at this from a technical perspective, yes, here's right before the government opening right here, the sell-off right after that, which was on higher volume, which is concerning. But let's take a look at this chart. This is a 6-month chart of the S&P 500. I'm going to put the regression channel on here. So it does give us concern. If we look at the regression channel, we are actually at the low end of this channel, and we're also sitting on the 50-day moving average. So we feel like we've been raising some cash, getting rid of our more speculative names, and getting ready to purchase the most uh, the stronger names that we love that have been kind of expensive. So we're kind of gearing up for that opportunity. But right now, this is what we're looking at on the 3-month, or excuse me, on the 6-month. And I want to back it out to the 5-year. Blake and I looked at this like coming from the pivot of 2002 and what it looks like. And really, we're right at the center of that regression channel. So it's not necessarily showing too expensive. You have anything you want to add to that, Blake?
Yeah, just say that what we're looking at here, most likely, is probably just a tech sell-off, people rebalancing to other parts of the market. We're not seeing, a wider shift in the overall market outlook. There are some technical symbols that we might be finding support already. But corrections like this, 5-10% corrections are normal. They're healthy for the market. They set us up for future growth. So while it's good to be careful, especially if you're in more speculative positions, I don't see a larger cause to be exiting the market right now.
Right. So one of the things that we're watching on the docket for this week, which is very important, is the earnings report for Nvidia that comes out on Wednesday. And we like to, whether you own it or not, you probably do own it because it is a major, I think it is the largest component of the S&P 500 and probably the NASDAQ also. So Nvidia is, I'm going to bring it up for us, kind of following the same thing. So if Nvidia goes down, more than likely the overall market's going to go down because of pretty much it's in everything these days. So it is sitting on that 50-day moving average. We got that earnings coming up. Volatility is very high. I watched the moving average convergence divergence line, so it is moving down lower. We watched that. So we want to talk about our experience we had with Charles Schwab this last week. Our whole staff, we went to the Charles Schwab conference in Denver, Colorado. It's their biggest conference of the year. We got to see all the major investment companies there talking to us. We got to listen to the heads of departments at Charles Schwab and what they're offering us. We chose Charles Schwab as the custodial bank. One is they don't have any trade fees. Two is they are the largest independent custodial bank service out there. They manage over $4 trillion. But the main reason why we chose them is because their software. That software that you're looking at right now with Nvidia, this is ThinkPipes, Thinkorswim on their retail channel. And I've been using this for decades now. And I still believe it is the best resource out there as far as for trading and managing money and getting us information that we want about the markets. So we really had a great experience. But you know what? Charles Schwab is a pretty good investment too. Blake, you want to talk about that real quick?
Yeah, if you pull up the chart, Charles Schwab has been flat for the last couple months, a bit of consolidation on their end. But fundamentally speaking, they're very strong. And as we look at, we talked about people divesting of the more speculative, tech-heavy assets. This is the type of space that we might see them move into. Financial, very stable, good dividend, and it's a good transition when we're looking at de-risking the portfolio?
This is a longer chart, a 5-year chart, and this is going from 2021 till now. And what we would call this is a giant cup. And this would be what we call the handle here, technical speak. So it came right up to the old high, broke through it just slightly, back down off of it. It seems to be consolidating right now, as Blake was just saying, and it's a pretty good setup, technically speaking. And I think fundamentally it's a great setup. One of the things I also want to bring up, it trades at 21 times earnings. That is less than what the average S&P 500 stock trades for. So it is cheaper than the general market. We talked about small financial companies like Dave the other day, which is a $3 billion company. So it's a really speculative small name, which could have big opportunities on the upside. Charles Schwab would be more like a anchor type of holding in a portfolio, high quality, actually relatively low to the market. And they have $166 billion of market cap is what they have. So a lot bigger than a Dave out there. So something to think about. We're grateful that you've tuned in and listened to us. Blake, you want to close this out?
Yeah, I just highlight that here we use Charles Schwab as a custodian bank, their services, but we are an independent registered investment advisory firm. And part of that is our fiduciary responsibility to our clients. So if you're interested in working with us for personalized asset management or custom financial planning designed around your unique needs and goals, we work on a straightforward fee-only basis, no setup fees, no exit fees, just transparent pricing for the services we provide. If you're ready to take that next step towards a confident retirement, we'd love to talk with you and see if we could be of help. Thanks so much for listening. We'll see you next time.
Thanks.